Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Paychex Inc., ticker symbol PAYX, a major player in the human capital management space. If you're looking to understand whether this stock deserves a spot in your portfolio, stick around because we're covering everything from financials to valuation, recent performance, and more. Let's get started. So, first things first, let's set the stage. Paychex is a well-established company in the payroll and HR solutions industry, serving small to medium-sized businesses across the U.S. and beyond. They've been around for decades, and their services range from payroll processing to benefits administration and insurance solutions. If you're an investor looking for stability with a touch of growth, this company often pops up on the radar due to its consistent performance and solid dividend yield. Today, we'll break down their business model, crunch the numbers, and see if the current price makes sense for long-term investors like us. Let's talk a bit more about who Paychex is. Founded in 1971 and headquartered in Rochester, New York, Paychex has grown into a leading provider of integrated human capital management solutions. They cater to over 700,000 clients, helping businesses manage payroll, HR, benefits, and even insurance services. With about 16,500 employees, they operate primarily in the U.S., but also have a presence in Europe. Their business model thrives on recurring revenue from subscription-based services, which gives them a nice layer of predictability. Under the leadership of CEO John Gibson Jr., they've been pushing into tech-driven solutions, like AI-enhanced workforce management tools, to stay ahead of the curve. This focus on innovation alongside their core offerings makes them a standout in the industrial sector, specifically within staffing and employment services. Now let's dig into their revenue streams. For fiscal year 2025, Paychex reported total revenue of about $5.57 billion, a solid increase from $5.28 billion in 2024. Breaking it down by segment, their management solutions category, which includes payroll and HR services, brought in roughly $4.07 billion, making up the lion's share of their income. Meanwhile, their PEO and insurance solutions segment contributed about $1.34 billion, showing strong growth as businesses increasingly outsource these functions. This segmentation tells me Paychex has a well-diversified revenue base within their niche, which helps buffer against downturns in any single area. The consistent year-over-year growth also signals that demand for their services remains robust, even in a competitive market. Moving on to earnings, Paychex has been delivering some impressive results. In their latest fiscal year 2025, they posted a net income of $1.66 billion, down slightly from $1.69 billion in 2024, but still reflecting strong profitability with an EPS of $4.60. Looking at their Q3 2026 results, which just came out, they beat expectations with revenue up nearly 20% year-over-year to $1.81 billion and an EPS of 167. This growth was driven by strong performance across both their core management solutions and PEO segments. It's clear they're benefiting from increased demand as businesses focus on streamlining operations. However, some analysts have trimmed forecasts post-Q3 due to potential macroeconomic headwinds, so that's something to keep an eye on. Overall, though, their earnings track record shows resilience and an ability to maintain margins even in uncertain times. Let's take a closer look at what management had to say during their recent Q2 2026 earnings call. They highlighted a robust financial performance for the quarter, emphasizing double-digit growth in key segments. The leadership team pointed out that their investments in technology, particularly AI-driven tools, are starting to pay off by enhancing client experiences and driving efficiency. They also noted strong client retention rates and growth in their PEO business as key drivers. Looking ahead, management remains optimistic about fiscal 2026, citing their comprehensive product offerings and adaptability to market trends as reasons for confidence. This kind of commentary suggests to me that Paychex isn't just resting on its laurels, they're actively positioning themselves for future growth, which is a great sign for long-term investors. All right, let's dive into the financial statements to get a clearer picture of their health. On the income statement side, Paychex has shown steady revenue growth over the past few years, climbing from $4.6 billion in 2021 to $5.57 billion in 2025. Net income has followed a similar trend, rising from $1.1 billion to $1.6 billion over the same period. Their gross profit margin sits at a healthy 73.4%, and net profit margin is around 26.4%, which tells me they're incredibly efficient at turning revenue into profit. Switching to the balance sheet, as of fiscal 2025, Paychex had total assets of $16.56 billion, with cash and equivalents at $1.63 billion. Total liabilities stand at $12.44 billion, giving them a debt-to-equity ratio of about 1.3, which is manageable for a company of this size. Their current ratio of 1.27 indicates they've got enough liquidity to cover short-term obligations. Finally, looking at cash flows, operating cash flow for 2025 was a strong 1.95 billion, and free cash flow came in at 1.76 billion. They're also returning significant value to shareholders, with $1.45 billion paid out in dividends. These numbers paint a picture of a financially sound company with strong cash generation and a disciplined approach to capital allocation. Now, let's talk valuation. At the current stock price of around $93.50, Paychex has a market cap of about $33.56 billion. Their trailing PE ratio is roughly 20.86, which is reasonable for their industry, where the average PE sits around 62.86. Their forward PE for fiscal 2026 is estimated at 17.5, suggesting the stock might be undervalued relative to future earnings growth. Price-to-sales ratio is 5.51, which is on the higher side, but justified by their strong margins and recurring revenue model. Dividend yield is also attractive at 4.67%, making this a potential pick for income-focused investors. Comparing this to their enterprise value of $36.72 billion, I think the valuation reflects a fair balance of growth and stability, though it's not exactly a bargain at these levels. Let's break down Paychex through a SWOT analysis to understand their strategic position. Starting with strengths, their robust financial performance stands out. Consistent revenue growth and high margins show they're a leader in their space. Their strong brand and client base of over 700,000 businesses give them a competitive edge, and recent awards, like being named one of the world's most ethical companies for the 18th time, boost their reputation. On the weaknesses front, their heavy reliance on the U.S. market could expose them to regional economic downturns. Also, while they're investing in tech, they face intense competition from other HCM providers who might innovate faster. For opportunities, the growing adoption of AI and automation in HR and payroll services is a big one. Paychex is already rolling out AI-driven tools, which could drive further growth. Expanding into international markets more aggressively could also diversify their revenue. Lastly, threats include macroeconomic challenges like inflation or recession, which could reduce demand from small businesses. Regulatory changes in labor laws or data privacy could also increase compliance costs. Overall, Paychex is in a strong position, but they need to keep innovating and diversifying to stay ahead. Looking at recent performance, Paychex's stock has had a rough patch. Over the past week, it's down 2.22%, and over the last month, it's dropped 15.06%. Zooming out, the past 6 months show a decline of 34.3%, and year over year, it's down a hefty 39.28%. However, over a 5-year horizon, the stock is still up nearly 1%, which speaks to its long-term stability despite short-term volatility. Compared to the broader industrial sector, which is up 28.29% over the past year, Paychex is lagging significantly. This underperformance might be tied to analyst downgrades post-Q3 and broader market concerns, but it could also signal a potential buying opportunity if you believe in their fundamentals. Technically, the stock is trading below key moving averages, so short-term momentum isn't great, but for long-term holders, this dip might be worth considering. Let's wrap up the numbers with an intrinsic value analysis to see if Paychex is fairly priced. Using a discounted cash flow approach, I've taken their historical free cash flow, which was $1.76 billion in 2025, and projected it forward based on conservative growth assumptions of around 5% annually for the next 5 years, with a terminal growth rate of 3%. Applying a discount rate of 10% to account for risk and market conditions, we arrive at an intrinsic value. Based on this model, the intrinsic value of Paychex comes out to around $104.53 per share, compared to the current market price of $93.50. This suggests the stock might be undervalued by about 18%, offering a potential margin of safety for investors. Of course, DCF models depend heavily on assumptions, so take this as a starting point rather than gospel. But combined with their forward PE and dividend yield, it does make a case that Paychex could be a solid value play at these levels.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.